3 months ago, I did a video on a project called DefiChain, and since then, they've had a number of huge updates take place that we really needed to go over. So for those of you who aren't familiar, DefiChain is a proof-of-stake blockchain designed as a hard fork of the Bitcoin network, really to solely focus and allow for DeFi applications, whether we're talking about liquidity mining, ownership, decentralized assets, decentralized loans, really anything DeFi related. DefiChain has been working on over the last couple of years, trying to make it accessible to everyone. And one of the things that I really like about DefiChain, which we'll get into a little bit later, are called decentralized assets, where it allows anyone in the world to invest really and take part in investing in traditional stocks that people may not have access to. Let's say like Tesla stock or Apple stock. And it's not that people are investing in these stocks directly, but there is a way that DefiChain allows this to be decentralized, backed by crypto, and allow anyone the ability to get some exposure to traditional stocks that some people might not have access to. So we'll get into more of the specific details of that later, because that is one of the most exciting things about this project. So if you haven't seen my video on this already, make sure to check that out. But for those of you who aren't familiar, DefiChain is a native decentralized finance blockchain built as a hard fork of the Bitcoin network. And there's three things I really want to talk about. First is going to be their native token, DFI. So DFI is their native token. And with this native token, there are a lot of different utility aspects of it. First is going to be with fees. You can pay for transactions, smart contracts, and other DeFi activities on the DeFi network. Second is going to be loan collaterals. They have community fund proposals, liquidity pools, and many more, which I'll link down below. Next thing with this project, though, is with the DeFi token and the whole entire ecosystem, we already see that they have over $800 million locked. So if you look at their TVL, right now the TVL of DefiChain is $801 million, which is significantly higher than some of our favorite cryptocurrencies out there, like let's say Cardano. Cardano's is less than 300 million, well below 300 million. So this just shows you how undervalued, in my opinion at least, this project is, because people are actually using its ecosystem. And you can see all these different dApps and things already built on it. But the most important thing is right now the TVL, which is substantially higher than many of the cryptocurrencies in the top 15 or 20. Next thing I want to talk about, though, is going to be with it says your key to the DefiChain ecosystem. One thing that's really important with DefiChain is that you have access to its ecosystem. And you can get this in one of two ways. Really, it's going to be either downloading the DefiChain wallet via mobile app, iOS, Android, or DFX wallet mobile app, which is also on iOS or Android. And this just gives you a way to easily take advantage of the DefiChain ecosystem. You can store your coins there. You can trade, you could swap, trade everything in there. Last thing I want to talk about before we get into these decentralized assets is going to be with DefiChain's DEX. You can look at DefiChain, you look at their website, they have a DEX where they offer liquidity mining for up to 100% returns. They allow you to easily buy, sell, trade, swap different assets. And you can see that this DEX already has very attractive offers in terms of APR. If you're looking at DBTC to DeFi, DUSDT to DeFi, and all these other tokens, which you could check out here. But much of this we've already gone over in the video a couple months ago. The big thing that I want to talk about really in today's video is going to be this big update they had as of recently. So recently, DefiChain had something called the Fort Canning Road hard fork. It's officially live, and the important thing about this is that with DefiChain's decentralized assets, these things that represent, let's say Tesla stock or Apple stock, these tokens that represent these stocks, the important thing with this is that there's been so much demand for these that D tokens were selling at a 10 to 15% premium to the value of related stocks because of this high demand. And this actually pushed a lot of people away, made a lot of people not want to invest in these tokens and buy these tokens because of such high premium. So with this new upgrade that rolled out, the Fort Canning Road hard fork, it is essentially going to ensure that D token prices are going to stay within 5% of the equivalent real world share prices. So that is something that's very important, because you don't want to be buying a token, let's say a token that's supposed to represent Tesla stock, and it is so much higher in value. You feel like you're not getting a good deal. You feel like you're getting ripped off. So with this new fork that's taken place, it's going to ensure that these token prices stay much closer in terms of price to the real world stocks. Now let's talk about, though, what is actually going on with Decentralized assets. For those of you who aren't familiar, decentralized assets are essentially tokens that can be minted by anyone on the DeFi blockchain simply by locking some liquidity in place. You can use the DeFi native token, you could use USDT, you could use a number of other stablecoins, Bitcoin even, and they have a whole list of assets that you could use on their platform. But basically what it is you can either mint or invest into any of these different D tokens that are already accessible. The important thing about this is that it gives anyone in the world access to investing in, let's say, stocks that they might have not been able to invest in due to geographical restrictions, maybe even trading limits and other issues that didn't allow them to get exposure to some of their favorite assets. But with DefiChain, it makes it accessible to everyone. And remember, these aren't like owning the share. You don't get paid out dividends. You don't you don't get paid out quarterly dividends. It doesn't mimic the exact price, but it is backed by cryptocurrency. It's more of a decentralized way to get exposure to these stocks. So this is something that I think is pretty cool in my opinion. Now, I think I went over all that. I want to just quickly touch on a couple things that I'm doing with my DeFi position because we did talk about this about 3 months ago. Prices are down significantly. So a way to combat this, a way to allow that I still earn a little bit of passive income on my holdings is I have been actually staking my DefiChain tokens. They allow you to stake on Cake DeFi, which I'll do a video on in a couple days probably, talking about, and DFX. And also you could even stake on KuCoin right now. They list everything on their website from where to buy it. You could buy it on KuCoin, Hotbit, BitTrue, many of the major exchanges. You can stake it as well on a number of big exchanges. So this is just something just to keep in mind because even when the market is down, it doesn't mean you can't be earning passive income. You can't earn money. There still are ways to do that with whatever token you're doing, you're invested in, you're interested in. You just got to look for places you can stake it, look for the most attractive rewards, make sure it's safe and secure. But anyways, that's what's going on with DefiChain. A couple of big updates as of recently. Couple of new things in terms of what I'm doing to ensure I still earn passive income on my investments. Let me know your thoughts on it. But I hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.